The Nasdaq bouncing back today after yesterday's big slide in big tech, managing to close positive on the week. The 0.5% change since Monday belies some serious movement under the surface, however, including top performer Intel up nearly 10%, laggard Meta falling nearly 7%, losing about $80 billion in market cap. Joining us right now is Rohit Kulkarni, senior internet analyst at Roth Capital Partners, and Ben Reitzes, Melius head of internet research. Guys, happy Friday. Ben, you made a call at the beginning of the week, some of it kind of PC related that certainly seems to have panned out. What did you say, and why do you think it worked that way?
Well, what we thought was that it was time to dust off the AI laggards, and we highlighted AMD, Intel, IBM, and Apple. And Apple obviously has had a nice run, but we think it can continue. With regard to Intel, it's just probably the most hated name in my coverage. We are seeing an uptick in PCs. Actually, it's not due to the AI Copilot stuff. It's really just due to some cyclical aspects. And we were picking up that some PC data in the 2Q was looking okay. And then we do think there's a big pop in the 4Q. And we highlighted AMD as well. And frankly, AMD also has its AI chips, its GPUs that compete with NVIDIA. So there's a little more AI sizzle there. And they both had lagged in the first half, and we thought they could catch up. With Intel, it's a little more risky. They have some more gross margin risks into the back half. But PCs and servers are looking up, and AMD, we think that goes to our target at 210 pretty quickly.
Rohit, your top picks are Amazon and Uber. Starting with Amazon, we're about to get a lot of end-of-the-year software-type platform conventions and announcements. Is that a catalyst at all? Oftentimes people think it's not, but I look at Apple since WWDC. Anybody who sold it thinking that AI news wasn't going to be a big deal is probably a bit disappointed.
I think Amazon gets the reacceleration in cloud. That's what expected in the stock right now. Greater reacceleration with how they're playing catch up to Azure. The moment we start to have that narrative in the market that Amazon is no longer an AI loser, that was the narrative in 23 and 24, that narrative is starting to reverse. They're playing catch up. That's as more industry events, more AI events occur in the next 3 to 6 months, Amazon will host their own big AI event in Vegas. So all of that should contribute to greater halo into how AI adoption is helping Amazon, and they're setting themselves up for a very fantastic 25.
So, okay, Ben, as we look at software specifically over the next quarter, we're starting to get into earnings season. We get Netflix, and then we're going to get ServiceNow and a few others. For small software, the bar is arguably pretty low because they haven't been moving that much. But there are a few names that have actually been trading on some pretty high multiples. What's it going to take, both in their overall results and in the confidence of the guidance, to move the needle here?
Well, I think software in general is still facing a challenging time here. There is a shift in budgets towards AI, which is somewhat infrastructure related, but also software, has been raising prices. The SaaS companies have been raising prices on folks for ages, and especially in COVID. And I just think the compounding nature of that, something's got to give, and we're seeing that. You may have some companies fight back and drain some backlog for this quarter and fight back, but in general, software is going to be a tough spot. There's probably a bunch of trading calls. We've been saying Microsoft's probably more insulated than others just because they have the cloud, and they obviously are safer. But I think software is a tough place to be over the long term. Wouldn't be shocked if some of the laggards, weren't as bad as feared, though, especially those with ties to cloud. All the major clouds look like they're doing very well, and some of the software companies help manage those platforms.